Hello and welcome to another exciting episode of World of Business, your weekly update into trending news and latest developments on the stock markets. It's also on this show that we herald unsung but thriving entrepreneurs. And on this episode this week, we're looking at Zimbabwe's economic outlook towards 2026 and beyond in comparison with the 2025 outlook, which had been predicted by the IMF at 6%. Similarly, the World Bank had predicted it to be around 6% as well, but our own government had predicted it to be at 6.6%. And the evidence is there, the progress is there. But now we're looking towards 2026. What is the economic outlook, especially when we look at other countries in the sub-Saharan region? Now, I'm joined in the studio by Mr. Tinotenda Kambasha, as always a regular for his expertise and knowledge in dissecting this topic. But before we head into it, we're going to give you the commodities and the exchange rates as of today. The Zimbabwe gold to the US interbank rate was at 26.19 ZiG. The Zimbabwe gold to the Great Britain pound interbank rate was at 34.55 ZiG. The Zimbabwe gold to the euro interbank rate was at 30.35 ZiG. The Zimbabwe gold to the South African rand interbank rate was at 0.65 ZiG. The Zimbabwe gold to the Botswana pula interbank rate was at 1.85 ZiG. We also give you commodity prices as they are on the global market. Gold per ounce traded at $4,190 after it went up by 0.31 percentage points. Silver per ounce traded at $52.31 after it went up by 1.33 percentage points. Copper per pound traded at $512.80 after it went up by 0.74 percentage points. Platinum per ounce traded at $1,559 after it went up by 0.42 percentage points. And that's it for this segment of World of Business. Do stay tuned. We've got more to unpack here on World of Business, exclusive to ZBC. Welcome to the second segment of World of Business, and we take a focused look at Zimbabwe's 2026 economic outlook, and we're looking at the sectors that can provide the most and the sectors that provided the most in 2025 towards 2026. Now, I'm joined in the studio by Mr. Tinotenda Kambasha, the Chief Executive Officer of the National Venture Capital Company of Zimbabwe, NVCCZ. Mr. Kambasha, welcome.
Thank you, Tafara.
You're a regular on the show.
Yeah, becoming a regular, right?
Now, let's just jump straight into it. Sure. How would you characterize Zimbabwe's economic position as we approach 2026, especially with the release of the NDS2?
I think the economic position currently is looking very strong. And, you know, we always say that men lie, women lie, but numbers don't. And the numbers are looking pretty good. And, you know, I always go back to the fundamentals. When you look at currency stability, you know, and that has been managed in a fantastic way. And we've seen that ZiG holding it around between that 26, 27 mark, which also shows the amount of confidence that people have within our currency. So which is very, very encouraging. And we've also seen the gold reserves that back up the ZiG increasing, which actually I was thinking, you know, the ZiG should be strengthening, you know, but I guess it's going to be over a period of time and as we build up more confidence. You can then also look at other factors. Let's look at export numbers. Those are things that you can't argue with. Our exports are up. So now that our ZiG is strong, when we export more, we earn more foreign currency.
Yes.
So which actually makes our currency even stronger, right? So we have more foreign currency to use within the country.
So talking about the ZiG, would you say this currency our local currency has performed better than other local currency, especially under the Second Republic and everything?
Yeah, I mean, look, it's maintained its value. It's maintained its strength. Its backup is in gold, which gold and a basket of other commodities and other currencies. But this actually has shown that it actually can work.
And investor confidence in the ZiG?
I think the investor confidence speaks for itself. So the exchange rate, when there's no investor confidence, the exchange rate will speak to you.
Yes.
You don't need to ask anyone. So it will speak to you and it will move accordingly. So the fact that it's holding shows the investor confidence within the country. It shows that there is not just only from foreign investment, but domestic investment as well. So now we're actually seeing a lot of domestic, local people actually getting involved more in manufacturing, agro-processing, farming, mining. So showing that they've got a lot of confidence within our own economy.
Okay. Now, talking about these sectors, how have they been contributing and delivering the most to the growth of the economy?
So this is quite interesting. Obviously, we've got our traditional sectors. Mining has always been a strong performer. And agriculture has always been a strong performer.
These two have been the backbone.
They've been the backbone for a long time. But along the way, we saw tourism. So we're starting to see services coming up more, you know. So services and ICT. So when we talk about ICT, we're not just talking about computers, we're talking about the services that they're bringing, whether it's money exchanging, cybersecurity, and so forth. So you're seeing other sectors come in. But I think what's mostly interesting is seeing the value addition along the way, whether it's in mining, and we're seeing value addition, whether it's the iron and ore plant or whether it's the lithium processing. We are seeing that strong side. And I think that's going to be the backbone of NDS2, is value processing. So even when you look at agriculture, let's say, instead of exporting tomatoes to South Africa, you know, we want to see exporting tomato sauce.
All right.
Right?
Or the ready processed.
Yeah, we want to see more processing. And you'd find that, especially through the Ministry of Industry and Commerce, they're making a very direct and deliberate effort into increasing that value addition. You know, they've just launched the Industrial Development Fund, which is going to be assisting companies in specific areas of value addition to then add value. And then once we add value, that product in itself costs more. So which means that we can sell it for more and we get more foreign currency, which stabilizes our economy.
Now, still on these productive sectors, what economic indicators suggest that Zimbabwe's productive sectors are strengthening in line with the national development targets?
So going back to those figures I was talking about. So number one is exchange rate. That's your number one indicator. The other ones fall straight after that. So you've got how much are we spending. So tomorrow we will hear the national budget, and we will see how much are we spending versus how much we're earning. So that balance of payment is very crucial. So those numbers will also speak to how the economy is doing. Another indicator, which I think is huge, is how much investment is coming into the country. If you've seen the skyline of Harare now, I mean, it's really impressive. I had someone who was here 2 years ago, and they were like, "What's going on?" I said, "Yeah, we're moving, you know."
Infrastructural development.
Yeah. And you're seeing a lot more foreigners come through. I mean, if you ask the likes of Zida, they'll tell you that there's an increase in foreign direct investment coming into the country, which is a direct barometer to show how much confidence people have in our country. And the funny thing is, you're not only seeing investment in one sector. It's not just mining.
Yeah.
You know,
agriculture.
It's not just agriculture as well. We're seeing energy.
Oh, yes,
right?
Yes. Now we have private players in the energy development.
Yeah. We're seeing players in transport. Right?
True. The NRZ recently was refurbished.
Exactly.
Yeah.
So it's encouraging to see that foreign direct investment happening. But again, I'll go back. It's just not about the foreigners. It's also about how much are Zimbabweans investing in Zimbabwe. That's also quite encouraging. And you're seeing locals, even a lot of these townhouses, and sort of all of that money, some people in the past would have externalized that money. But right now, having them invest in their own country, I mean, we are now having, a construction boom
I guess
for
like,
housing.
like our president says,
Yes.
Nyika inovakwa neveni vayo.
Yes.
Now, how is the business and investment environment evolving as the country advances towards the goal set for NDS2?
So the business and investment environment is strongly improving. And we have seen this through the growth of many businesses, but also many sectors. Just for example, I did mention the iron and steel plant, which has now moved on to the next level, of procuring the products. But we've recently also seen an assembly plant, a car assembly plant, set up. I think it's in Mount Hampton. We've also seen, the huge investments in Mutare through the oil refinery and so forth. So the business environment is speaking for itself, and if it wasn't so conducive, there wouldn't be that growth.
Yes.
And even when you look at brands or companies that are developing in certain products, you're seeing more of the products coming through. You're seeing expansion in the types of Varun beverages. So the business environment speaks for itself, and I think the growth is seen and it's tangible, and you can taste it literally.
Exciting times.
It's exciting times.
All right. Yeah. Now, we cannot talk of NDS2 without talking of NDS1. And how have the structural reforms and stability measures under NDS1 and the transition into NDS2 contribute to improved performance in these sectors that you were mentioning?
Well, they directly contribute. If it wasn't for NDS1, we wouldn't be seeing a lot of this growth. So the stability that came with NDS1 made it very conducive for businesses to then grow. The problem with businesses cannot plan, they cannot grow. So if a manufacturer cannot know the replacement cost of a certain raw material that is key to making a certain product, they will not expand that business, right? So the fact that businesses are growing shows you that they know that when I sell this product, I will get my money. And when I get my money, I will be able to order again and then make the same thing again and continue the process. Right. So that stability that was brought through NDS1, so all of that, again, going back to currency stability, going back to predictability, going back to issues to do with actually understanding that the environment is conducive and we can grow. And the rules allow you to grow. I think that's another good thing.
Yes.
The rules have been allowed for you to grow with the ease of doing business and so forth. So that whole packaged in one is what is driving the growth of this nation.
Now let's just look at the region of sub-Saharan Africa just for a little bit. Our economic growth compared to other countries in the region, how does it look?
Well, obviously, as a Zimbabwean,
try to be impartial.
Look, we are doing way better.
Way better.
Way better. So, look, I've heard other people arguing that we're coming from a lower base. But I think the consistent, and during that drought period and the COVID period, we managed our situations much better.
Than most countries. Yes.
And we recovered much more quickly. And we are growing at a faster rate. So again, the numbers don't lie. And going into NDS2 and with the confidence that we have, I think that growth is going to continue. Zimbabwe is going to continue being the growth hub of at least the SADC region. I think it's going to extend further, COMESA aside,
Yes,
but,
of course.
we are going to continue growing on a very good rate.
Like Mr. Kambasha is saying, we are going to continue growing on a very good rate. And we're going to end this segment on that. We'll be right back after this. Do not go away. It's the World of Business on ZBC. Welcome to the third segment of World of Business, and we are looking at Zimbabwe's economic outlook with a focus on the sectors that have been contributing the most. Now, I'm still joined by Mr. Kambasha in the studio, and we're going to just jump straight into it. Now, Mr. Kambasha, which sectors or subsectors offer the strongest investment potential for accelerated progress towards NDS 2 targets?
And I think that's a very good question. And the fact that you're saying accelerated growth. So obviously, we would start off in saying mining, but no, we're saying processing of mining, the value addition, is going to be quite key in that next growth stage. And we're also looking at the agro processing. So I think the processing sector is what is going to drive that growth going forward. And again, we can't then grow without any energy.
Yeah, we cannot.
So that's going to be key as well. And we've seen quite a lot of deals being signed. And, you know, very happy to see now more Wange power stations coming up and so forth. And
refurbishment of current units.
Exactly. So that power side of things is also going to be key to drive, because industry cannot grow at a very fast rate if the power side is not also growing at a similar rate. So we're going to need to really beef that up. So that's definitely going to be like a major key sector in that area. But then again, once we've produced everything, we need to move it.
Yeah, true.
Right? So we've seen a fantastic road network rehabilitation, and it's continuing. We are probably now going to see more infrastructure in the rail and the movement of those goods that we've now value added, to say. And I think the last one, which is quite interesting, we keep talking about AI, you know, and so forth. That digital space is going to be the new bubble boom. But you know, as a country, we are trying to stay afloat or even leapfrog ourselves ahead. But it's important that we actually understand what AI is, and what it can do, and how to harness it. So far, we've started seeing the streamlining and digitalization, at least from government's point of view. We've started digitalizing a lot of government departments, and you've seen the fantastic work that was done at the passport office.
Yes.
You know, we've seen what Zimra's doing, you know, and the new system it's brought on, and the one-stop border post. So you're seeing the streamlining of systems, ease of doing business, and so forth. So the more we come together in that digital space, the more that we can have access to information at our fingertips using AI. I think that's where the next big boom is going to come from.
All right. Now, talking about the value addition, what opportunities exist for both domestic and international investors to support value addition, industrialization, and export growth?
So, yeah, investing in the processing part, and I liked that little part you sneaked in at the end, export growth.
Yes.
Okay. So, for us to then harness our export potential, we need to have environments that encourage export. So we've got special economic zones or export processing zones. So we have some that have already been there from the past, and we've got some new ones which have been commissioned. So it's basically when government makes the environment more friendlier, more tax friendly, you know, and allows training and allows movement of goods and export of goods, that's where you start seeing things starting to move.
All right.
So I think that area, the biggest growth has to come from those public-private partnerships, those special economic zones and export processing zones, because the moment you start bringing in the public and the private, and then you're piecing that together, it then allows business to flourish, but also through the protection from the government. So yeah, that's the way forward.
Now, looking at Zimbabwe's economic outlook, what are the major risks that are affecting Zimbabwe's outlook, and how can they be mitigated?
Yeah, I think a lot of risks are just not Zimbabwe focused. They are global. We've seen this global crisis happening.
Yeah.
You know, people think it doesn't affect us, but you would find that a lot of products that come from part of those regions or ships that move in those regions had been blocked off, which affects the pricing of a lot of things for us. So it's not just a Zimbabwe thing. But I think our biggest risk right now currently is not a risk, but we have to maintain the discipline we have. I think the biggest risk is ourselves. So if we can maintain that exchange risk and the spending risk, I think that'll be fine. From a global perspective, how we can mitigate those risks, we are already doing. Look, we talked about having the ZiG backed by gold. Look what happened to the gold price. We were talking about that way before the gold price started going up. But then all of a sudden, we look like geniuses, right?
Right.
That we're sitting with a huge stockpile of gold reserves. So I think such things, if we continue such mitigating factors, stocking up on foreign currency, stocking up on gold reserves, fiscal discipline, not spending too much as government, and exchange control discipline, but then we channel our resources to exporting more. I think that way, that's a no-brainer.
Yeah.
We will definitely win if we just maintain where we are.
All right. Now, this is more of a trivial question.
Yeah.
The IMF has predicted Zimbabwe's economy to be around 4.3. 4.3. The World Bank predicted it to be around 4.6. This is like the 2026 outlook.
Yeah.
What's your personal prediction of the Zimbabwean outlook in 2026, the economic growth?
I'll still maintain the 6%.
The 6%.
Growth, if not more.
If not more.
Why I said that is that the phase we're moving into now is of that value addition. So if you look at prediction and trends from the past and you look at NDS1, maybe 4 or 5%, maybe. But the fact that we're moving towards an industrialized, innovative, exporting country that is crowding in the private sector, and His Excellency makes that very, very clear.
Yes.
That we want to crowd in the private sector. So we're not just looking at what the government can do in its own little circle. We're saying, no, let's bring in the private sector. Let's allow them to flourish, right? So first things first, we're cleaning up the ease of doing business, right? And then once we're done with that, we're then saying to the private sector, here you go, we are hands off for now. Do what you need to do. If you need us for any help, we're here to assist you. Right. So then that is where that next move. So my 6%, I think, is a bit too conservative.
All right.
That's
I
my
like that.
personal point of
Now,
view.
talking about investment infrastructure, how can this investment in infrastructure, especially looking at energy, transport, digital systems like you were mentioning, strengthen product capacity and support NDS2's growth trajectory?
Yeah, like you mentioned, the project capacity is what we're trying to do, right? And we can't, whether it's in the digital space or in the mining space, we need the energy. And circling back to what we said, we need the energy, and we need that to then prop up the growth phase into NDS2. So I think the infrastructure in itself not only creates jobs. So if you look at the roads and the rails and so forth, it creates massive jobs. Even the power, massive jobs. So if we then create jobs, that means more people are employed. That means more people have more money. And then that means more people move up to the upper to middle income
society by 2030.
You see what I mean?
Vision 2030.
So you see, so that infrastructure growth is also building into the people, because when we talk about an upper to middle income society, right, it means that we're aggregating everyone in the society to have an average, right? So we can only do that if everyone gets more money in their pocket to spend.
I'm curious now about this upper middle income society. Can it be reached at the 6% growth, or the growth has to be more than 6%?
The growth has to be more than the 6%.
And can we achieve it right now?
So yes, I think we really can, because in NDS2, we're really looking to that industrialization and innovation side of things. But at the same time, we're looking at a lot of value adding onto our processes. So as long as we stop exporting raw materials, or at least limit and value add as much as we can, industrialize more, right, from all the earnings that we're doing, spend less money, right, export more, we will reach the goal.
Now, finally, what measures can enhance investor confidence and ensure sustained capital flows in strategic sectors identified in NDS2?
We have to maintain our position. We have to maintain our currency position. We have to maintain our spending position. But I think what is more important is we have to maintain our commercial court systems as well.
right.
Right? When you have disputes, investors want to know that they can be resolved in a swift manner, and that is fair. So that's another aspect that people don't talk about, is our judicial system, our commercial courts, which are doing a fantastic job, by the way, and don't really have a lot of airtime that people give them. So I think those three things will be quite key: exchange control, balance of payment, all right, fiscal discipline, and judicial systems.
Wow, Mr. Kambasha, thank you very much. It's always a pleasure having you on the show.
Thank you, Tamara. Cheers.
Now, thank you to our viewers for joining us here on World of Business, only on ZBC. Now, till next time, my name is Tafaranda Guta, and from myself and the crew behind the scenes, it's back to business.